openness on the investor side, when it comes to established businesses, this sort of it brings in these challenges to say, okay, how do we get all these parties comfortable? So this is where, the usual threads apply, Balaji, in terms of the challenges that we have, whether the financing or the investment is coming from locally in Nigeria or internationally. We want certainty. Investors or financiers want certainty, they want stability, they want legal infrastructure to protect their investment or their financing. They want transparency. They want global reputation. So they want to be able to set up an entity and be able to navigate with that entity globally in terms of whether accessing financing in London or accessing financing in Nigeria or South Africa. They want to be able to navigate all those markets without having to set up different structures wherever they go. World technology connectivity. I mean, Lexi touched on that, and you also touched on that. The startups of this current world that we live in, a majority of them are tech-based, a majority of them are disruptive, a majority of them are young people very hungry for success, immediate success. And they want to have this journey. They have a typical journey. They want to come in, they have an idea, a fantastic idea that will work locally in Nigeria. And then they want to get funding. They'll come to the likes of Lexi and Rob and say, look, I want some funding. I have a successful idea. I need to move it to the next stage, which is I want to move nationally or regionally within West Africa. So they look at the bankability of that entity or that idea, and see, okay, whether we're going to support that. And then that journey continues to this IPO, and Lexi touched on that. Exit through IPO. How can you do that? How can I access an international capital market, and then also have this long-term strategy of an exit, whether it's by an IPO or in some cases a takeover or an acquisition by a multinational. So in all those circumstances, an international financial center like Jersey play a key role. They provide, obviously you've heard about this, they provide tax neutrality, they provide jurisdictional neutrality, they provide help, they help facilitate foreign direct investment, they provide the expertise. So I'll tell you from our jurisdiction perspective, Jersey has a population of about 107,000, but 14,000 people work in the financial services sector. It's incredible. You have the real real substance and expertise available on the ground, whether it's for funds, whether it's for tech businesses, whether it's for private wealth, all sectors within the finance industry are captured in that. So this kind of, we haven't even touched on other forms, and I'm sure we will touch on that, Balaji, in terms of other forms of financing that are there, green or ethical or Sharia compliant, all these add this level of complexity. So I think the answer to the question is, when you have an international financial center, you have this ready-made pool of individual and service providers that are there to support and provide a platform recognized globally by the likes of the OECD, World Bank, EU, etc., to give both investors, investees, founders, the comfort to come together in a neutral kind of setting. Okay. Now, going to just, if I can finish on this point, going to Raj's point, obviously a jurisdiction like Jersey would provide solutions for all types of investments. So we have US investors that set up funds, or fund managers set up funds within our jurisdiction in Jersey because they want access to European capital. And to be honest, this is also quite an important point for Nigerian businesses, Nigerian corporates. You want to access international finance like European capital. Jersey provides that platform. But it's fair to say that Jersey will not be the solution for every type of asset base located in every jurisdiction globally. So for example, if you have an asset, real estate asset in the US, Jersey may not be the optimal jurisdiction to structure that through fully. There may be a dual structure, and Raj, you know that with many kind of investments that come in, you have a multiple layer, multiple tier kind of structure that comes through. And it may be that the first half where the funding comes in can be the Jersey structure, because international financial institutions are very comfortable with having that funding structure at the top. but actually the holding structure may be
So
structured in a different jurisdiction because of that. So this is, so I hope that answers the question. I know it's not too technical.
it does, Faisal, but I'm worried about us, sort of, getting a bit complicated and
Agreed.
really being quite sensitive to the bulk of our audience. Because many of these companies are much smaller companies. For some of them, they're in very, very simple traditional businesses.